I thought everyone was aware of this, but after having a couple of conversations with people this week, I came to realize that no, not everyone is aware of this. I think the implications are so important for everyone in this community that I decided that I had to make a video about it. Biden has a new program called the American Families Plan. It promises benefits to all kinds of individuals and groups. And what should be of major concern to people is how they plan to fund this program. The IRS has estimated that in 2019, the difference between taxes owed and taxes paid was $600 billion. The proposal is to fund the American Families Plan by closing this tax gap. And how will they do it? By providing the IRS with new powers and the ability to monitor bank account transactions. Let me read to you directly from the Department of Treasury report so that you know that I am not just speculating about this and spreading fear unnecessarily. So I'm going to read the executive summary. It said, President Biden recently proposed the American Families Plan, advancing comprehensive and necessary investments in American children and families. To help support this important agenda and increase fairness in the tax system, the President also proposed a set of tax compliance measures to foster a tax system where Americans pay the taxes they owe. This report describes the President's tax compliance initiatives that seek to close the, quote, tax gap, unquote, the difference between taxes owed to the government and actually paid. According to Treasury analysis, the tax gap totaled nearly $600 billion in 2019 and will rise to about $7 trillion over the course of the next decade if left unaddressed, roughly equal to 15% of taxes owed. These unpaid taxes come at a cost to American households and compliant taxpayers as policymakers choose rising deficits, lower spending on necessary priorities, or further tax increases to compensate for lost revenue. The magnitude of the tax gap means that compliance initiatives have the potential to raise substantial revenue, but these reforms also improve tax progressively and economic efficiency. While roughly 99% of taxes due on wages are paid to the Internal Revenue Service, compliance on less visible sources of income is estimated to be just 45%. The tax gap disproportionately benefits high earners who accrue more of their income from non-labor sources, where misreporting is common. Further, the tax gap imposes distortions because of the resources some expend to avoid paying taxes and the incentives created to shift economic activity into certain areas where the tax liabilities can be illegally evaded. To raise revenue, improve efficiency, and build a more equitable tax system, investments in tax compliance are of first-order importance. The compliance proposals in the American Families Plan provide the IRS the resources and information it needs to overhaul and enhance tax administration. These policy changes are integral to addressing evasion, but they also prioritize improving taxpayer service and the experience of Americans as they navigate the tax system. Yeah, sure. Taxpayers would benefit from the effective communication with the IRS. Yeah, of course they will. Access to tax credits to which they are entitled, and competent assistance as they file their taxes. The President's compliance agenda has several transformational elements. Number one, provide the IRS the resources it needs to address sophisticated tax evasion. The first step in the President's tax administration efforts is a sustained, multi-year commitment to rebuilding the IRS, including nearly $80 billion in additional resources over the next decade. The IRS would grow manageably, no more than around 10% annually, but also have certain funding in place to make investments with large fixed costs, like modernizing information technology, improving data analytic approaches, and hiring and training agents dedicated to complex enforcement activities. This would make up the ground that the IRS has lost over the last decade. During this time, the IRS budget fell by about 20%, leading to a sustained decline in its workforce, particularly among specialized auditors who conduct examinations of high-income and global high net worth individuals and complex structures like partnerships, multi-tier pass-through entities, and multinational corporations. 2. Provide the IRS with more complete information. When the IRS can verify taxpayer filings with third-party information reports, such as the W-2 forms submitted by employers to report wages, compliance rates exceed 95%. Without third-party reporting, compliance rates fall below 50% and thus lead to inequitable asymmetry in tax collections, depending on the form in which income is accrued. The Government Accountability Office and IRS agree that strengthening third-party reporting is one of the most effective ways to improve tax compliance. The President's proposal leverages the information that financial institutions already know about the accounts that they house. Financial institutions would add information about total account outflows and inflows to existing reporting on bank accounts. Importantly, there are no added requirements for taxpayers. The IRS will be able to deploy this new information to better target enforcement activities, increasing scrutiny of wealthy evaders and decreasing the likelihood that fully compliant taxpayers will be subject to costly audits. As a result, voluntary compliance will rise through deterrence as would-be tax evaders realize that the IRS has an additional lens into previously unreported income streams. 3. Overhaul outdated technology to help the IRS identify tax evasion and serve customers. The IRS still relies on individual and business file systems that date back to the 1960s, the oldest in the federal government. The result is decades upon decades of tax administration built upon a system that is written in a programming language that's no longer taught, and where new functions are added in patchwork rather than in an integrated manner. Modernization funding would allow the IRS to address technology challenges and develop innovative machine learning that could be deployed to better identify suspect tax filings. For example, by comparing returns to similarly situated taxpayers and historical filings in a way that the current IRS ecosystem does not allow. These resources would also support efforts to meet threats to the security of the tax system, like the 1.4 billion cyber attacks that the IRS experiences annually. With a revitalized IRS, taxpayers would also be able to communicate with and receive guidance from the IRS in a clear, timely manner when questions arise. Oh good, more interaction with the IRS. Further, modernized IT would help improve taxpayer service and ensure that the IRS is able to effectively and efficiently deliver tax credits to eligible families and workers, including recent expansions to the child tax credit, the earned income tax credit, and the child and dependent care tax credit proposed in the American Families Plan. 4. Regulating paid tax preparers and increasing penalties for those who commit or abet evasion. Taxpayers often make use of unregulated preparers who lack the training to provide accurate tax assistance. These preparers submit more returns than all other preparers combined, and taxpayers rely on their guidance, in part because of challenges in reaching the IRS in a timely manner when questions arise. In addition to the regulation of paid preparers and service improvements that would simplify tax filing, the President's proposal includes additional sanctions for so-called ghost preparers who fail to identify themselves on the tax returns which they prepare. It goes on. Experts at the Treasury Office of Tax Analysis estimate that these initiatives would raise $700 billion in additional revenue over the next decade. This revenue is backloaded in the 10-year budget window, as several of these new investments, such as hiring revenue agents capable of complex global high net worth examinations and building the technological infrastructure to support a new information reporting regime, take years to reach their full potential. As Figure 1 shows, the revenue raised in the second decade amounts to $1.6 trillion. These estimates are conservative. Because the revenue potential of additional resources for tax administration is based on return on investment estimates from the IRS that only exist for adjustments detected through the current enforcement-related activities. Benefits of other foundational shifts in tax administration that would result from this proposal, for example, overhauling and integrating IT systems and restoring trust in the IRS through timely support for taxpayers, are also unaccounted for. Moreover, although revenue estimates for increased information reporting include the effects of this regime on voluntary compliance, estimates for enforced enforcement actions do not account for deterrent effects, which are generally considered qualitatively significant. Okay, so I'm going to stop reading here and just give a little bit of commentary on my part. Now, I heard in a speech by Janet Yellen recently that she expects that it will take until about 2023 to implement the changes needed to allow banks to report the required transaction data to the IRS, and for the IRS to implement the infrastructure necessary to process and analyze all of this additional data. Once in place, this new system will enable the IRS to flag unusual transactions, much the same way credit card companies detect fraudulent transactions today. If any of you in this community sell anything, I don't care whether it's gold, silver, Bitcoin, a used car, whatever, and deposit the proceeds into a bank, it means the danger of not reporting the gains on your tax form will be very high. So I'd keep all of those transaction receipts, folks, both on the buy side and the sell side. They may be very important in the near future. Thanks for your attention.